What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis. And, well, our economy may be getting a lot worse than a lot of people are expecting. Let me just show you right here. And inflation might be a lot worse as well, at least going forward. So, look at how bad our economy is getting. Number one, Amazon. Amazon and Walmart, really the two largest employers here in the country. Amazon plans to lay off about 10,000 employees starting this week. 10,000. Number two, Meta, aka Facebook. Facebook parent company Meta will lay off 11,000 employees. Number three, Lyft. The rideshare company, like Uber, lays off 13% of its workforce as it tries to slash operating expenses. Over 1,000 employees. Shopify recently laid off over 10% of its workers and plans to lay off even more. Stripe laying off about 14% of its workers. And Netflix, Spotify, Coinbase, and Shopify all also announcing layoffs. Also, billionaire investor Christopher Hohn, who has a $6 billion stake in Google, Google's parent company Alphabet, tells the CEO of Google to cut people aggressively at Google, saying management needs to take aggressive actions to reduce cost, saying that Google had too many employees and the cost per employee is too high. Also, to note here that this exact same guy saying this is an investor worth about $8 billion. He's also a noted philanthropist who has donated billions of dollars to charities as well. But when it comes to running a business, if businesses aren't making a profit, the first thing they do, or one of the first things they do, is start to cut costs. Sometimes, or a lot of times, that means cutting labor. And we're seeing this right now. The economy is really struggling, and we're seeing tens of thousands of people get laid off. And to make matters worse, we just started to see inflation come down a little bit. But on the other hand, I'm seeing headlines like this. Top economists see US inflation running even hotter through next year. Yeah, they see it running hotter through the next year than they did a month ago, and recession odds continue to mount against a backdrop of rising borrowing costs as the Fed continues to hike interest rates. Projections for the Personal Consumption Expenditure Price Index, the Fed's preferred inflation metrics, were raised for each quarter of 2023, and price pressures are seen cooling over the course of the year. Many economists expect high inflation and the Fed's aggressive interest rate policy response to tip the economy into recession next year, if we're not there already, which a lot of people think we are. Federal Chairman Jerome Powell said earlier this month that interest rates will likely go higher than policymakers had projected earlier, but the path may soon involve smaller hikes. The central bank is expected to raise interest rates again by 50 basis points or half a percent in December again. And remember, every time they raise interest rates, who does it hurt the most? Low income Americans and middle low income Americans. It raises the prices on credit card interest rates. It raises your credit card interest rates. It raises new mortgage interest rates. It raises variable mortgage interest rates. It raises personal loan interest rates. It raises car interest rates if you have to go buy a new car or a used car. any type of loan, any type of borrowing of money, which is what credit cards are, you're borrowing money, it makes the interest rate more expensive. Yeah. In fact, many people think the Fed has raised interest rates too much already, with credit card interest rates already at the highest all-time highs. Yeah. In fact, some people think the Fed should stop raising interest rates completely, which I kind of agree with. Now, however, here's the problem is that if inflation gets worse, you know what'll happen, right? The Fed will raise interest rates even more. Yeah, so it's just like it's such a double-edged sword here. It's like, and the problem is where we're seeing, so we are seeing things come down in prices. Car prices are coming down dramatically. Home prices are coming down dramatically. The actual cost of the home for sale. But the problem is that like the interest cost of homes is skyrocketing because interest rates went from like under 3% or 3% to now 7% or higher. And car loans again went from like, near zero or depending on the financing deal to like, sky high as well. Um, and cars were selling for over MSRP, over asking price. You couldn't in some cases find a car on the lot. Now you can actually walk in and find cars on the lot and actually deal because now their car dealers are desperate in some cases to sell cars because the interest rates are sky high. So now they actually have inventory, and in some cases they're dying to sell cars. So this is we are seeing prices come down in things like that, and we're going to continue to see them come down as interest rates continue to go up. But what we're not seeing come down are things that aren't interest rate sensitive, like food costs and gas costs. Really the same thing. Gas costs have been coming down a little bit. It really depends on your area. I see some comments of people saying our gas has gone up, but the gas prices nationwide, have kind of been going down here. So you can see this is the national average gas price. Of course, it's completely can vary by state and stuff like that. But you can see here a week ago it was 380. Now it's 375. So we have gone down 5 cents in the last week. And a month ago it was 389. And now it's 375. So we have gone down 14 cents in the last month, which is surely better than going up, right? The problem is diesel is actually going up. So diesel's actually gone up 10 cents in the last month. And it's just the trend is reversing because of the diesel shortage. Really, the diesel shortage is just because the gas and oil companies just literally don't want to produce more because it's their way of keeping the price high. Just like OPEC Plus, cut oil production by 2 million barrels just so they could keep prices high. They know what they're doing, right? Um, so again, it is nice to see this going down a little bit. We had a little bit of a reverse trend where it went up, and then it kind of stayed there for a while. And then now we're seeing it go down a little bit, which is actually surprising. It's good to see that, especially with OPEC and OPEC Plus, Saudi Arabia and Russia. They teamed together to cut oil production by 2 million barrels a day. So imagine if they hadn't done that, how much gas prices would be lower because oil prices would be a lot lower than they are now. So that has helped prop up oil higher because remember the summer driving season is over now. Remember, summer driving normally keeps gas higher, and so they've cut their production to keep the oil prices higher than what they should be. So really, gas prices and oil prices should be lower. So this is kind of the games that countries around the world and gas companies around the world play. Remember that the gas companies are not our friends. As much as they like to say this, remember they haven't built a new refinery in the U.S. in over 50 years, not a single refinery. In fact, they've closed several refineries over the last few decades. So, and the Chevron CEO said they're probably never going to build another refinery in the U.S. ever because they don't want to invest the money, but they have bought tens of billions of dollars in stockholder buybacks, shareholder buybacks. So they won't invest in a single refinery, but they will buy back their stocks in billions and billions of dollars. So I'm just like, let's just think about that. It's just like, okay, like it's just so ridiculous, right? What they say. Oh, we don't want to invest the money. Meanwhile, $20 billion in stockholder buybacks. Okay. So you can let me know your thoughts here in the comments, but this is what happens. So that's why I like to keep you guys, let you guys know the real story of what's going on. Um, because you got to remember that these gas companies, these oil companies, and the pharmaceutical companies, even like colleges, colleges aren't that bad because there's some colleges, even like Harvard and Yale and stuff, that have actually they have so much money that they have free college completely for like a lot of students now. Um, so they're actually doing some good things, but the problem is the cost of college has gotten so expensive over the year that it's like there's such bad offenders that now they're doing some good that it's just like, well, you've kind of ripped off so many people along the way that now you're helping a little bit of people. It's just like, well, it's like you've been a bad guy for so long that now it's like some of these college funds have like $30 billion in trust fund. So now they're like, well, we have so much money, we don't know what to do it. We might as well start like letting more people come to our school for free. But like to qualify, you have to like, be valedictorian with a 4.4 GPA and this, that, and the other thing. And it's just like, yeah. So, but again, this is why I tell you guys about this stuff. So you guys know the truth about all this stuff, what's going on here, no matter which side of the aisle you're on. So let me know your thoughts here in the comments, and I'll keep you up to date here with everything going on here in our country on a daily basis. Make sure you subscribe down below to our YouTube channel. It's completely free to do so. And click the bell icon down below after you subscribe so you don't miss out on our new videos. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. You can click here to watch my newest video next. And you can click here to watch my new video about Social Security changes that you might not even know about. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.